Good morning, everyone. And before we get started, thanks for joining. Keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer, everyone. And with that, let's get started. I'm going to share my screen. And what I think we'll do today is continue the discussion we left off from the previous show. And we're going to take a look at screening for option contracts by volume, significant volume, or open interest. And we'll do a couple different screens just as examples. Before we get to that, let's just take a look really quickly what's going on today in the pre-market hours. So here we got the stocks trading in pre-market hours. We got the most active stocks, biggest percentage gainers, biggest percentage decliners. And I'm scrolling down here just to take a look at how many made the percentage gainers list. So we got 63 on the percentage gainers list, 119 on the percentage decliners list. So almost 2 to 1. That's favoring more of a bearish bias at the open. I'm going to take a look also at the higher market cap stocks, 20 billion or higher. And on this list, we got 3 that made the percentage gainers list, 50 on the percentage decliners list. So they're much more tilted towards a bearish opening. And I think, what do we have, Will? The Fed came out, said that they might start raising interest rates sooner than expected.
Well, that's certainly how the market interpreted it, for sure.
Right.
They are also seeing some inflationary pressures, and if they see that it is not transitory, they may make moves earlier to
right. And they got a lot of stuff going on right now to pump money into the economy. Besides interest rates, we're at near zero. They're also purchasing something like $100 billion worth of bonds and paper, and that has the same effect as pushing money out, right? So they're buying assets and pushing money out into the ecosystem. So we'll see how that goes, but obviously now the sentiment is that they might start to remove some of that stimulus, and it looks to me like they're still expecting to start raising interest rates in 2023. So that's pretty far out there anyway, right? It's not anytime soon. But having said that, let's move on to the report that we stopped at previous show. And I'm going to come back to it. So under options, this is under OI analysis. And then I go to this tab by option contract. And in this report, we did add some new features here, and we have 4 sections here. This is anchored by a specific option contract for a symbol, because we know that a symbol could have, has calls, it has puts, different strikes, it has different expirations. So here we're trying to kind of narrow down to an option contract and what's going on, that we could find something interesting about it. And it's either going to be in the volume or in the open interest. And we divide it up into the option volume for the day. So this option volume, as we discussed, this will start updating, when the market opens, some 15-minute delay, but as volume comes in, the prices are updating. This section will start updating throughout the day. Open interest, that's calculated by the Options Clearing Corporation based on settled trades, end of day settled trades. So you only see that updated once a day in the morning following the next business day, right? Following the trading activity. So these are not updating throughout the day. That's how open interest is calculated. There's no such thing as live open interest. So when we looked at the things we talked about is when we looked at the option volume, what makes it, we have to kind of figure out what makes it unique or what makes it unusual. And same thing with open interest. Like, is there something about the open interest that's unusual that we should take a look at. And one way to do that is to kind of have a benchmark of what would be unusual. So we talked about, like, for example, a stock like, ABC, an unusual amount of volume would maybe be 1,000 contracts, but stock like Tesla, 1,000 is nothing. You would have to be much higher. So to figure out what's unusual for that particular stock, we'd have to create benchmarks and compare it to the benchmark. We did the option volume, the previous, and I think we stopped at the open interest. And we have 3 different open interest calculations here. So one of the things we want to take a look at is, well, the open interest had a change yesterday, right? So here, the open interest, for example, here, this was up by 250 option contracts. So now the total open interest is 299. So you could see that before that, there's 49 open interest yesterday, 299 contracts traded, but that increased the open interest by 250. Okay. Here, same thing. This tells you the change and then what the new open interest is, and this is the percentage that the open interest changed on the day. And some of these changes may be significant, some of them may not be significant. So we kind of need something, a signal to tell us, was this open interest a significant change? So what we do here is we compare how much that open interest changed versus the average daily option volume. Okay, so we take all the option volume on average per day in that stock. So each stock, they might have different calls trading, puts, different strikes, expirations. If we sum it all up and we take what on average, how much options on average trade on a given day, we see 24,700. So here, if the open interest increased by 940, that represents about 3.8% of the average daily option volume. So it's not really big. There's nothing like very significant, but let's take a look at a screen and see if we could find something that was significant. So we see open interest change, average volume. So I'm going to use this filter, and let's just say over 100%. So here we got, 373 different option contracts yesterday that met this condition. So I'll take a look at the top one, ACI. Yesterday, there's 3,763 contracts that traded on the October 15th, 17.5 put. So this was the volume yesterday. The open interest increased by 3,735. So remember, with volume and open interest, it's different. We talked about this before. So you could have volume, a high volume, and very low open interest, because if you have a person opening a contract and closing the contract the same day, that will show up in the volume, but the open interest could end up being 0 the next day. So if Will and I traded 100, if I bought 100 contracts from Will in the morning, and then I sold the 100 contracts back to Will before the end of the day, well, the volume was 200, right? 2 transactions, 100 each, but the open interest was 0 at the end of the day because we both closed out of our positions. So when we're looking at the volume, we don't really know until the next day how many of those contracts are still open. Did people open a position and they held on to those positions? So that's what the open interest is telling us, that yesterday there was 3,763 contracts that traded, and the open interest increased by 3,735. So most of that, we're opening trades and they're still out there. And that increased the open interest on this line by 765%. Now there's a total of 4,223 contracts that are open. So what that means is the day before, there's already something like 500 contracts open, and then it increased by another 3,735 yesterday. Okay. So is this a significant amount? Well, this here is telling us that the change in open interest represents 191% of the average daily option volume in total. So on average, ACI trades 1,947 contracts. The open interest yesterday on this one line increased by 3,735, right? So that's a pretty significant amount, compared to what it trades on an average day. So that's what that is telling us, that there was a significant change in open interest relative to what is the average volume on the day. So it would take, if you just compared this average versus this open interest, that would take more than a days of trading if we just use the average amount. Couple other things that you could, that might be significant is you wanted to see, well, what happened to the option and price and the option implied volatility. So here, my takeaway is this, that the stock yesterday decreased by 1.5%. And we're looking at a put here, right?
Yeah, that was one question we had. Albert just asked, do we know if the OI was a call or put, buying or writing?
So this is what it's telling you. This is the option contract, October 15th, 17.5 put. Right, so that's what the option contract was. And the takeaway is the following. And you never know, nobody tells you if somebody's buying or selling. There's always a buyer and seller, right?
Always. It takes a buyer and a seller to get it done, right?
Right. So you want to make an inference. What do you think was most likely happening, in this volume? Were there more buyers or more sellers, right? So if there are more buyers than sellers, the option contracts, the implied volatility is going to go up. If there are more sellers, implied volatility is going to go down. So here is my takeaway just looking at this. The price of this stock was down 1.5%. But at the same time, this put decreased by 8 cents. Right, so that's kind of counterintuitive. Well, why is the put going down and the price of the stock going down? Because price of the stock goes down, you expect the put price to go up, right? That's why you're buying. If you're buying puts, that's what the objective is. You're making money on the way down. So the reason is because the implied volatility is down, right? So yesterday, what this is telling me is that even though the stock was down, somebody doesn't believe that it's coming down way lower than this. So here, what this is indicating to me is that there's a big put seller of premium in this option contract. That had the effect of lowering the implied volatility, which also had the effect of reducing the premium in that option. Okay, so to me, whoever was opening that position with the broker dealers was selling the contract. That's my inference looking at this, just looking at this activity. Does that make sense to everybody?
It does. We are having some questions, Steve, if I could throw them out there. Okay. Well, Ken is asking, so does the column of total open interest in ACI, 57,885, what does that column mean to you? How do you interpret that?
So I didn't get to this one yet, but this is open interest added up for calls, puts, every strike, every expiration, all the open interest that is total. Okay. And then we compare it to this. So this one, I didn't get to this one yet, or this one. Okay, we're looking at different metrics. Remember, we divided it up into 4 sections. So this one is a section on its own, so I'm going to do this next. But right now, this one is by option contract. So this is the open interest on this line. Okay. This one will be looking at total open interest. Were there other questions?
Well, Mike asked something. He said if we have a long open position for calls and a symbol and see growing volume and 5-day open interest is rising, can he interpretate? Is that generally bullish for an option? More volume, would that be seen to be increasing the value of the option? Is vol? I mean, I guess it depends on everything, right? He's asking, is it bullish? If the open interest keeps going up, is it bullish in the calls? And you'd have to know way more about it, right? It's
yeah. I
that
think
would start you thinking about it, but then you'd have to, dig deeper into it.
Yeah, because you kind of try to make an inference, right, based on the surrounding data and information. Now, there's no no signal, on the tape, oh, hey, this volume is bullish, or here's Warren Buffett, he just bought this. There's no signal like that where it tells you what somebody's doing and what everybody's position is, because that would defeat the purpose of, the stock market. If you knew everybody's position, that would make it like much easier. You don't know, but you try to create an inference of what you think is happening based on the data and information available to you. And sometimes it's like a best guess. Just like I made this inference. Well, I see somebody opened up yesterday a new position, so now I know that there's more risk. Somebody's holding more risk, on the table than from the previous day. And I see that, how many contracts. I don't know if it's one person, or I could go see how many different trades created this volume. I could go to the options chain and look at that, but I could also see from the price and implied volatility action and what the stock did. I'm interpreting this that there was a significant seller in the puts, because that's the effect it had, was pushing down the implied volatility in that option and the price of that option. Again, I'm making an inference based on this data. I don't know for sure, who did what. I'm just trying to paint myself a picture.
Yeah, well, certainly you can't look at this and say all these puts have traded and that it's bearish on the stock, right? I mean, it seems like with the vol coming in, it may be someone who's, selling the puts because he thinks, the stock's either going to sit or maybe drift higher potentially.
Exactly. Right. If you're selling puts, if you're a seller of puts, you obviously don't think that this is going to crash, right? Below 17.5, you think this is a pretty good deal. And you think like maybe whatever the stock fell, it doesn't have much more to go down,
Yeah. And maybe you're not worried about owning it at 17.5. That could be the thing as well.
Yeah. Right. So, right. But it's not necessarily, I don't think you could take these trades and necessarily say this is a bullish signal to go buy a stock, or bearish signal to go sell a stock. That's not always the case. Maybe if you see a lot of accumulation in other indicators, but you're kind of just getting a sense of what somebody was probably doing yesterday. So I'm going to move on to this next one. This is looking at the total open interest in ACI. So this one is already, we know, oops, wait, what did I just do? ACI. So whenever you click on one of these column headings, it resorts it. I clicked on this one. But I resorted back to alphabetical order. So if we looked at ACI and we added up all the open contracts, in every call, every put, including this one, there's 57,885 contracts total open interest right now. That spans every expiration, every strike. So what we want to see is if there's a concentration of open interest anywhere, right? And this is what this is doing. It's showing us a concentration of open interest on a specific contract. So here, if we compare 4,223 to the total 57,885, that represents 7.3% of all the open interest. Okay, so not a big concentration in this one line, right? So people are playing on different lines. This one represents 7.3% of the total open interest. So I'm gonna let me unfilter this and let's look for concentration, right? So this is open interest as a percentage of the total. So let's take a look at, I don't know, let's try 50%. Okay, so here's an example. There's only 10 of them actually that have over 50% concentration. So I'm going to let me just sort it by stock price, highest stock price. So this is IVW, and this happens to be, I think, an ETF, right? But I'll just go through it really quickly and just take a look what this means. So we see here IVW on this option contract, July 16th, 71 call. There's a total of 1,906 contracts open interest in this one line. The total open interest right now is 3,469. So this one just doesn't happen to have a lot of open interest anyway. You know, it's only 3,400 contracts, but this one line represents 55% of all the open interest. So most of it is just the July 71 calls. And, you know, maybe the only one I see of somewhat significant total open interest is this 35,873. So this is the July 12.5 call. It's got 18,525 option contracts open, and there's 35,873 option contracts open in total. So this open interest represents 51.6% of all the open interest. Does that make sense now?
Yep.
Yeah. Okay. So I'm gonna unfilter this if this makes sense, and let's go over here to this last column, and it's another way of looking at open interest. So when we look at open interest on a single line, that strike could become potentially an inflection point for the stock. Okay, what I mean by that is it could, if there's enough open interest on a particular line that there's so much that it causes you know, hedging activity in the stock price, it could actually, you know, make that stock price, you know, blow right through the strike or pin there, right? So if you have a lot of trading activity based on people's positions in the options, because people in the options broker dealers are hedging their positions with the stock, it could become an inflection point. And what we want to do is compare, well, if the stock approaches this strike, right, and we think that it's potentially converted all into stock, you know, how much volume would that represent based on the average daily volume in that stock? All right, so I'm going to use a filter and show an example. So here's open interest as a percentage of average daily volume. Let me look at, let's say 50%. So what do we have here? 331. I'm gonna filter out just common stock. Okay, so I got common stock 239. Let's go to 100% of the average daily volume. All right, I got 75. So let me just use this as an example here. So here's Tiva. All right, it's $10.40 stock. And we're looking at the Jan 21st, 22 call. So this is a longer dated call. You know, it's got what, like 6 months at least to go. but it looks to me like it's got a significant amount of open interest, 99,000 contracts open on this 12 strike call. The stock itself trades 8.8 million shares on average per day. Okay, so that's how much it trades per day, 8.8 million shares. If TIVA breaks 12 and all these contracts, all these calls, right, these are calls, all these calls become exercisable, that's represents almost 10 million shares, right? All these calls are in the money, it becomes an exercise, they convert it to stock. That's 10 million shares of stock, which represents more than the average daily volume, 1.12 days of average daily volume. And one way to potentially look at it is, well, what do we think the broker dealers' positions are? Because if a lot of people are buying this call, the broker dealers will be short. And if they're short these options and they're hedging delta neutral, like the option pricing model says, like the Black-Scholes model, as the stock goes up, they're getting shorter deltas. They're going to have to buy stock on the way up. If they're long, they're doing the opposite. So we don't know yet what the broker dealers' positions are. We could try to make an interpretation, but that could be a potential inflection point where if the stock starts to approach this, especially as you get closer to expiration, this strike, and if broker dealers are short this option and they can't buy back, they have to hedge it using stock. So they're forced to buy stock, right, to keep their positions delta neutral. So that kind of creates this more pressure on the way up. A lot of people do, they look up gamma squeezes. I get emails all the time, do a gamma squeeze. But this is like one way, to try to interpret pressure on the stock as it's going up. As it's going up, you're creating even more pressure, buying pressure, because of the broker dealers' positions, right? So how can we potentially interpret or infer what the broker dealers' positions are? Well, the higher the implied volatility on that option, the more likely that the broker dealers are short them, right? Because if broker dealers, market makers, if people are selling options, they're buying options and moving the prices lower, right? Because on balance, they're long options, they're going to start moving their prices lower and lower to buy more. If on balance, a lot of people are buying and the broker dealers are selling, their short positions, they have to start increasing their prices as they're selling more and more, right? Because they'll need better prices for taking on more risk. So one way to look at it is like, what has the implied volatility been doing? If it's very high, the inference is that the dealers are on balance short these options. And if there's a lot of open interest, that could represent a significant amount relative to the average daily volume, that could create an inflection point where as the stock is going up, there's more, dealers are forced to keep buying it to continuously hedge their deltas and gamma. And that could push the stock, beyond, right through that strike. Does that make sense to everybody? Hopefully I got like 1 minute left.
Yeah, it's all super helpful, D. Unfortunately, I've been coughing and on mute most of the time. I've tried to get a few of the questions, but we've had a few questions around open interest. A couple on particular stocks. One, Brad has asked a couple about your opinions relative to, the first one he asked is, what do you consider to be a significant level for total open interest on a stock? And then he asks another, which maybe I'll copy all these down and we can have a part 3, because it does seem like a lot of questions are coming in around other open interest, ideas and stuff. So are you willing to do a part 3 on Monday?
Yeah, sure. We'll do part 3. We'll just answer the questions coming in. we could do just a Q&A part 3.
Yeah, because I know I missed something from Ahmed. Patrick was asking him something about market makers relative to open interest. So I'll copy all the questions and we can have a part 3 on Monday. Also on Monday, sorry about that. So everyone remembers is Jake is going to do his first live show at 10 a.m. So soon after we get off, he's going to get on and come to us with some ideas by Jake, things he's seeing kind of in the market, and he's setting up a paper account with Interactive Brokers. So that will be pretty interesting, I think.
Awesome. Well, thanks, Will, and thanks everyone for joining. Have a good trading day. Stay safe out there. Have a good weekend, and we hope to see you guys on Monday.
Great job.